Can you imagine investing in an IFB at a coupon rate of 18.5%, and then a few months down the line, you have an opportunity to make even more returns from that IFB? Now, that is exactly what we are going to be discussing in today's episode. My name is Berlin. If you haven't subscribed to this channel, please press the subscribe button, because if you don't, you risk losing out on a lot of valuable information that I share with you guys every so often. Now, in today's episode, we are going to be discussing how to earn revenues, or how to invest in the bonds, in the government bonds, and maximize your return on investments. Taking a particular scenario or a particular example of the IFB1 2024 8.5. This is the infrastructure bond which was issued in February this year, and it was sold at a coupon rate of 18.6%. Now, I would like you guys to see what is being reported. The guys who invested in this paper, I don't know if you remember me telling you guys that there is an oversubscription in these papers because interest rates were on a downward trajectory. Now, the reason why these papers were being oversubscribed, the reason why there was an oversubscription of this paper, of the IFB1 2024 8.5, was because their investors knew that, like Berlin was saying, that rates are coming down, there was an opportunity. They saw an opportunity, which I had also seen and shared with you guys, that a few months down the line, once the interest rates have come down, you can make more money. You can make capital gain from that paper. And that is exactly what is going on now. The investors who had invested in this infrastructure bond at 18.5%, your churches, your circles, your commercial banks, your MMF funds, your unit trust, your bond trust, your church, are now selling these papers in the secondary market at a premium to make a capital gain. So what is a capital gain? A capital gain is when you sell an asset at a higher price than the buying price. A capital gain is when you bought a property at 1 million and you are selling this property at 1.5 million. That 500,000 is your capital gain. A capital gain is when you bought shares or stocks at $100 and you are able to sell these stocks or these shares at $120. That $20 is your capital gain. A capital gain is when you bought Treasury bonds, a bond, even a commercial bond, at 1 million shillings. You invested 1 million in a bond, and at a point when the interest rates was 18.5%. Let me paraphrase that. A capital gain is when you had invested in the IFB1 2024 8.5 back in February, or when it was reopened, at a coupon rate of 18.5%, and then the interest rates have come down, and now this infrastructure bond, which has a high coupon rate, is now in demand, and you're now in a position to sell it in the secondary market at a price higher than what you bought it at. In other words, you invested 1 million, you sent to CBK 1 million, but when you sell it to me, when I come to buy this paper from you in the secondary market, you ask me to pay you 1.2 million. That 200,000 shillings is your capital gain. So that is exactly what is happening now in the secondary market. The investors who had bought these high coupon rate papers are offloading them in the secondary market. And why is there a rush to sell these papers quickly? Because they have maximized, or they are trying to maximize their return on investment, the profits they can make, the income they can make from those infrastructure bonds or from those bonds that had high coupons, because rates are coming down, so that they can move on to other revenue areas or to other investment options. And what are these other investment options? In one of the videos I did earlier, I told you guys that there is an inverse relationship between interest rates and stock prices. I don't know whether you guys watch my videos. By the way, if you haven't watched my past videos, please make a point of going through my channel and watching those videos one at a time, because some of them are related, yeah? And there's information that I can't keep repeating in each and every video, but it is important for you guys to have this information at your fingertips, okay? Now, when I did the interest rate, when I did the video telling you guys that the Fed Bank of US had reduced their interest rates, I told you that the interest rates in Kenya are also going to come down. Has the rates come down? Of course, yes. Now, I also told you that there's an inverse relationship between interest rates and stock prices. And I told you that because the interest rates are on a downward trajectory, they are coming down, investors are going to shift their focus from the interest earning assets, now that is the deposits and the bonds and bills, they are going to shift their focus or diversify more into the other investment areas, like now shares. I told you, when rates are lower, consumers have a higher purchasing power. And so companies, these listed companies, are expected to make more profits. And what happens when they make more profits? They're going to declare more dividends. What happens when they make more profits? The stock prices are going to be higher. I told you that when rates are lower, when rates are down, are coming down, investors are going to shift their focus from interest earning assets to stocks. And that is going to create a higher demand in the stock market. And what happens when there's a higher demand in the stock market? The stock prices go up. So if you are a member of this channel, if you have subscribed to this channel and you are into active investment, by around June, July, you would have increased your stock holding, so that once the prices hit hapo juu, the ceiling, you can now dispose your stocks and make some capital gain. Okay? Now you see, it is quite beneficial that you watch my earlier videos if you missed them, because there's information that remains relevant today, tomorrow, next year, and watch them repeatedly. There's a lot of information in these videos that I keep shooting out. My excitement today was on the capital gain. And I've just remembered I had already done a video for you guys telling you guys that rates are coming down, and I also disclosed to you guys that you can make capital gains from treasury bonds, especially if you have a high coupon treasury bond. Is it possible to make capital losses? Yes, it is. If you had a low coupon, if you have a low coupon treasury bond and the rates have gone up, it's possible for you to make a capital loss, especially if you want to sell your low coupon treasury bond at a time when rates are higher. In summary, it is possible to make two kinds of gains while trading in treasury bonds. You can earn through coupons. You can also dispose your paper fully or a portion of it and earn some capital gains. It is also critical to note that when rates, there is an inverse relationship between interest rates and stock prices. When rates are coming down, the stock prices increase. When the rates are going up, the stock prices are expected to reduce. Now that you have that information, do you think it would have been a wise idea for you to pump whatever loose money you had in the Treasury Bond so that you can sell it now to make yourself some capital gains, especially if it's money that you needed to use within 1 or 2 years. Do you think it will have been a wise decision? Is it something that you think you can consider? My name is Berlin. Let's meet on the next video.